Let's get some more market perspective. Joining us for that is Jim Paulsen. He's Chief Investment Strategist at the Leuthold Group. And Jim, taking a look at these numbers that are coming in, I know you're a little skeptical about where the markets are headed. You think maybe, just maybe, we'll get back to the high water mark this year?
I do, Becky. I'm fairly constructive yet here for the rest of this year. I'm not saying it won't be a straight line or anything, and we certainly probably get another period of scary sell-off, some kind of retest to that low. But I think there's good things here going on. We're easing the pressure on the market by we dropped the long-term Treasury by 50 basis points. Gas prices out here in Minnesota are breaking below $2 a gallon. We've got I think the next shoe to drop would be a weaker dollar, which should be forthcoming. And I just think that overall economic growth persist, maybe around the 2% or a little less, and we're going to come at some point to agreement that we're not going to hit recession. And if we're not, then we've cheapened the market, lowered yields, put a pause in the Fed and overheat pressures, and you probably get a return of optimism that pushes stock prices higher here over the course of this year. Earnings
season, at least in terms of the guidance, has really not been anything to write home about just yet.
Well, I expect, Becky, that I really do think the economy is slowing a lot in the United States, and we might grow less than 2% this year. So I expect a lot of bad news, and we're starting to get it. I think earnings might actually be flat to down this year from where they print at the end of 2018, and you're going to see analysts revising down earnings estimates, companies warning on their outlooks, overall, and you're going to get bad economic reports that come in, including eventually the job market going weaker, I think, by the spring. And this is all part of it. That's why the market fell 20% last year, is it kind of forecasting a major slowdown in the economy. But the key is, I believe, is if we don't recess, a lot of the fear that might come from bad reports and on earnings and the economy and otherwise could represent buying opportunities here during the course of this year.